Hello, traders. It's 8 a.m. Chicago time on Wednesday, the 12th of August, 2020. This is episode number 1817. Thanks for being here yet again today after a pretty exciting day yesterday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The slide in front of you here, the image in front of you, for those of you who are new, just gives you a background of where I'm coming from, a very, very, very brief bio. Just let me know if you have questions. This morning, the overall sentiment of the market is that of risk on. There is, gold had just what is one of the biggest drops we've seen in a long time, 126 points in gold yesterday, what amounts to basically a Six Sigma event based on 20-day close to close volatility, and a very, very unusual move. Gold is just slightly higher today at 1950, 1,950 on really good volume. Crude oil is leading the pack up 94 cents at 42.55. And the Russell is leading the indices. The Russell's up 18 points, trading near 1,600 this morning. Russell was relatively strong yesterday before the sell-off and is basically resuming. The Russell's up 1.15%. The Dow is up 307 points or 1.11%. The S&P is up 26 points. Big climb in the S&P overnight. The bonds are weakest, down 24 ticks on the futures. The Bund is down 55 ticks, and the dollar is down 16 cents. The typical safety assets are all down, and that's why we say allocation has been to risk this morning. So with risk on sentiment, we are essentially buying another dip based on yesterday's action. Yesterday's action is important. The outcome of yesterday was very important, and we'll cover that here in a minute. What is going on here? Okay, we'll cover that here in a minute. In terms of the calendar, everybody's got a calendar. You can always refer to yours. But this morning, the UK released its GDP growth rate, an astounding negative 21.7% growth rate year over year. As a preliminary figure for Q2, the forecast was negative 23, so it was actually better, but still a contraction of 21%. Balanced trade in the UK came in positive at 5.3 billion pounds versus 2.8, doubling the figure. In addition to that, we got core inflation this morning. Core inflation came in stronger at 1.6 versus 1.0. The inflation rate year on year came in at 1% versus 0.7. What remains is Fed's Rosengren at 10 o'clock Eastern, a half hour after the open. An hour after the open, we get crude oil inventories expecting negative. A draw of 2.875 million. The prior is a draw of 7.373 million. Fed's Kaplan at 11 o'clock, the monthly budget at 2, and Fed's daily at 3 p.m. That's what's on deck and is scheduled for today. The overnight session overall, let me see. The overnight session really gave us, had some pretty decent movement out of Japan and Europe. Big pop there. Looks like the index futures were rose a little bit on residual or resilient fuel demand, driving oil prices higher. Investors remain on edge due to a stalemate over the next coronavirus federal aid bill. European shares gained, boosted by telecom stocks following Liberty Global's takeover offer for Sunrise. Japan's Nikkei edged higher as some investors bought shares of major exporters on the back of a weaker yen. The dollar index slipped while spot gold rebounded in a volatile trade. That's from Refinitiv, a summary from Refinitiv. I look at a lot of different summaries just to get an idea of what kind of the bigger money is looking at for the day. And that's that. Let's take a look at what we expected yesterday versus what we got. Now remember, yesterday we did an Edge Wisdom segment. We're going to make sure that it gets posted so you can view it separately. I'll tweet that out if you're following on Twitter, twitter.com/futures trader 71. Here's what was expected yesterday. I was looking for, man, I got to keep changing these pens. I was looking for a dip down into the 51, the point of control from the prior session, from Monday's session, and I was looking for a pop to take us above the 79 for the overnight high, tackle, and we were likely to finish somewhere in the middle. The secondary is a quick push higher, given that it's Monday after, the Tuesday, the following non-farm payrolls. I was looking for a continuation move that then gets, as I said yesterday, probably somewhere in here. I said in here somewhere that it is likely to, once it pokes and makes new highs, it is likely to have an impulse down and finish lower. That's what it's done over the last few highs that it has made, new all-time highs. Little did I know that it would really move down. Of course, that looked like a news move to me. It coincided. It didn't coincide with anything that was explicitly negative, but the market definitely found some late buyers in the session. You note that overall the delta remained below zero and continued to push lower despite the high that was put in. There was really no participation by buyers. We could see that it was really struggling. I mean, it really had a hard time pushing that high. Could not take out the overnight high, and then it rotated down. Once it started to rotate down, it really exploded to the downside, giving up the 51, which was the initial target for scenario one. So what we had in the morning is basically scenario one. It dipped in, expected it down here. It turned at 54.50 instead of 51. Took out the high of the morning, but did not take out the overnight high before it started to fail. So up to this point here, it was scenario one. From here on out, I didn't have a scenario for this. And what we ended up doing is really just a fantastic. I mean, look, I know some people lost money yesterday. It's just the nature of the beast. So I'm not going to sit here and talk up the kind of trading that was there yesterday. But I've got to say that I've been off in my trading for the last 2 weeks. It seems that I'm back in alignment, and I've been very, very open and transparent about the fact that I just seem to be taking the wrong trades. Of several times I've sold the impulses down. I've sold the pullback and watched myself get stopped fully. And I've been very open with the fact that losses are just losses. They happen. I'd be a liar if I said that I was correct all the time. That's just total crap. But the fact is, yesterday, in my opinion, the market was really, really um, telegraphing the intent, and it was definitely telegraphing where the participants were stuck. We're getting stuck. We got a very clear picture of where the traps are. Again, no disrespect for anybody that did not read it this way and lost money. This is just me telling you how I saw it. Once we gave up This 47 area, really, we bounced off of the 47, small for about 3 points, and then once it gave that up, we got the pullback to 47. This is value low, a very, and I had actually missed it yesterday. Somebody had to remind me within Convergent. I had to ask somebody like, well, what is this 47? It's value low, and it is the low after the rally on Monday. Once it broke through it, it went to the 34 area, which is a stock zone. Then it pulled back into 48, just a point and a tick, 5 ticks through the 47 for a continuation. We don't always see the action so cleanly kind of play out, even in a big drop. We generally don't see the action play out so cleanly. Yesterday left us with a couple of singles. A minor one at 34.75. This area is important. If you look at the stock zones, you'll see we still have the stock zone at 35. And then the other single print, the key single print is right where we're trading currently. The key single print is right here at 54 and a quarter. 54 and a quarter at the break of the IB. The IB yesterday was tested multiple times. If you missed the move down, you could see that it was having a hard time, especially on a double IB low here. It went by a tick, pulled back, and as soon as it failed through, that was an opportunity to hit the bid, which I have not done in a while, to trade a breakout. But this market requires, in my opinion, as opposed to always looking for turning points on pullbacks in the direction of the trend in my time frame, hit the bid and look for the spill. And so that's the play. Where did we end up going to yesterday? We went to the MC point of control in this region. The MC point of control from the beginning of the month is at 18. We went to 1950 and we had some backup at 15 down here with the naked point of control. With the naked point of control before the bounce. A very important turning point. We did end the one-time framing up on the daily. We took out that 29. We ended the one-time framing up. We would want to see today put in a lower high. It doesn't necessarily have to put in a lower low for a new downtrend to be formed, but a lower high gets us there. So we want to watch what it does at 74.75. Remember, yesterday we made a new all-time high in the RTH session from 72 price adjusted, back adjusted to 74.75. So if today puts in a lower high and moves, and we see it to start to trade and move through this LVN zone, then it is very likely to start a downtrend, and then the odds start shifting in the short term, in the day time frame. The odds start shifting in favor of the shorts, the bears, for a period of time. Remember, the weekly high, we still have a higher high on the week. The weekly high from last week is in that 47 area as well. There was a lot of confluence here at the 47 yesterday, and the weekly high is at the 47. So the weekly time frame is still bullish, and it has some ways to go. I'll tell you, this is important to note. The weekly low, the one-time framing on the weekly is broken below 3276.50 in the RTH. So 3276.50, that's quite a ways down there. That's the next key area to watch. But the daily time frame is starting to turn over. The weekly time frame is still relatively strong. The NQ is weak. I'm keying off of. I'm finding a pretty good indication by keying off of the NASDAQ and more specifically to the Fangman stocks, and watching those closely to see how they're responding, in addition to a heavy lean on breadth and the tick and the traditional stuff. Anyway, that's the summary. Really good volume yesterday, 1.43 million in the day session. Excellent turnout and volume. Here's what I'm looking at in terms of Fangman. I'm looking at the 7 stocks, but I also created my own index called, I just call it Fangman here, that I'm tracking. This is a market cap weighted index of the 7 stocks, and I'm monitoring how that responds. I'm also finding myself more and more interested and more active in the NQ. In the NQ, generally, I'm just focused on the ES. Um, uh, just to keep things simple. But the NQ has been yielding some interesting setups. Again, it doesn't mean you should trade it. It doesn't mean that it's for everyone, but it's very fast. It reminds me of my DAX scalping days. It tends to respond very quickly. So that's where we stand. The overall delta yesterday, I wanted to talk about this actually a minute. The overall delta went with price yesterday, some pretty good participation on the delta side. Negative 27,000 is where we finished with a low of negative 31.8 or so, negative 32,000. There was some pretty good participation by aggressor sellers yesterday. And the pop higher was very weak in my opinion. It could only get to 32 from 19, and we left the point of control up top. So the value, yesterday's value did not shift down, and we have this thin profile. The question that we have to monitor today, the question that we have to ask and get answered today is, does it run down the flagpole? If it starts to run down the flagpole and trading this thin area down here, then the longs are in trouble. These late longs, the overnight longs are likely to be in trouble, or we're likely to make our way down to the key 28, 29 area. And if that doesn't hold, then we're looking at 18 and 15 below. But beneath that, we're looking at 03, 3303, and 3300. And more and more selling is likely to kick in if that happens. So the question today is, with the overnight high at 60.75, the question today is, does it come back and stay beneath this single print into the thin low volume node area, or does it push up and take out the overnight high? In that case, we are likely to see a short squeeze. We're likely to see a short squeeze, and we're likely to push back into the 69 area and back to all-time highs, and from there we have measured moves to work with, and then the target above there becomes 3380 first, and then so on and so on based on my stock zones. Anyway, that's a summary of what's going on. I'm not going to go over the order flow. There's nothing going on that I feel like I should point out. But let's get into, to wrap up, let's get into what's expected for today so we can have you on your way to finishing your routine for getting prepared for the day. So here's what I'm looking at for today. Today, I'm expecting to be very interesting. I'm expecting quite a bit of action this morning, and I'm looking for an early test. So I'm looking for an open auction in range. Value is, believe it or not, valid yesterday. We do have a Gaussian profile, a very well-defined profile, and so value at 55 and up is very important. I'm looking for this to rebalance. I'm looking for some responsive selling towards yesterday's close. I'm looking for it to make its trek there, and then I'm looking for the impulse up. And if we do get an impulse up, I'm looking to buy, push through the overnight high, and then start to attack that 69 area once we get in value, and then eventually take out the high of yesterday, put in a new all-time high in the day session, and then come back in and finish in the fat part of the profile, the overnight and the day profile from the prior day. This is a short squeeze. This is likely to push out the weak hands early on. The secondary scenario is just as you would expect, the opposite. The secondary scenario is an open auction that squeezes higher, pushes into 60, struggles to get to maintain above 60, get into the 61 area or so, 6150 or so, struggle to squeeze in there and then finally give it up, come back to the open, and then start working down the flagpole through these single prints. Let me turn on my master levels through these single prints all the way down to 34.75. That brings us into yesterday's lower distribution, consolidate, and probably finish and fill in this low volume node area. And that brings us back into the range of last week right in here. So we start to trade that bracket. These are the two main ideas. Um, Again, just trade what's in front of you. Uh, the best way to trade what's in front of you is to sit and watch what the market will do early on. Wait for the stronger hands to kick in. They generally don't kick in for the first 10, 15 minutes at least. Wait for those hands to kick in and then look to trade in that direction. Keep an eye on your breadth and see what the underlying sectors are doing. I monitor the S&P breadth rather than the NYSE. Advanced decliners and breadth are the same thing. So that's where we stand. I want to remind everyone, if you have not done so, to take a moment and subscribe to the YouTube channel. This way you're notified when I post videos like yesterday's Edge Wisdom segment. I put my face on it as an experiment. I think it's more personal to talk to you and look into the camera and talk to you. Hopefully my message can come across a little bit better, but because a lot of the communication is missing when we are just hearing a voice, and even worse when we are just reading text. So we'll keep experimenting with that just for fun, but overall, let's focus on the market. There's some opportunities today, in my opinion, and if not, it's an opportunity to learn and watch what the market does, as it is following normal auction principles, which is what I'm all about. It's a timeless way of looking at any market, in my opinion. Good luck.